Hey everyone, and welcome. Today, we are going to break down a topic that can feel really intimidating, but is so important for building wealth: the stock market. We're going to demystify the whole thing and give you a clear, simple plan for 2025. So, be honest, does the thought of stocks, portfolios, and all that market jargon just make your head spin? If you've ever felt like investing is some complex game that's only for the experts, you are definitely not alone. That's a super common feeling. But here's the thing. The truth is, the core ideas are actually surprisingly simple. Today, we're going to cut through all that noise and give you a really solid foundation so you can actually get started with confidence. Okay, so first things first. Before we can even think about investing in it, we kind of have to understand what the stock market actually is, right? When you strip it all down, it's really just a giant marketplace. Seriously. But instead of buying, fruits and vegetables, people are buying and selling tiny pieces of ownership in public companies. So when you buy a share of a company like Apple, you literally own a tiny fraction of that company. It's that simple. Now, you're always hearing on the news that the market is up or the market is down. Well, that's where indexes come in. Think of them like a quick snapshot of how a whole section of the market is performing. The S&P 500, that's the 500 biggest US companies. The Dow, 30 huge influential ones. And the Nasdaq is famous for all its tech stocks. They're basically the market's daily report card. Okay, so with those basics covered, let's make this personal. Because the most important first step you can take isn't about picking a hot stock, it's about figuring out why you're investing in the first place. And believe me, the reasons to do it are really powerful. I mean, just think about this. Historically, the stock market has returned an average of about 8 to 10% a year. That means your money isn't just sitting in a savings account getting eaten away by inflation. No, it's out there actively working to grow its own value. You're not just saving, you are building wealth. So, you gotta ask yourself, what's your timeline? This question is absolutely crucial. If you're investing for retirement, something that's maybe decades away, you can probably afford to take on a bit more risk for potentially higher growth. But if you need that money for a house down payment in, say, 3 years, you're going to want a much safer, less volatile strategy. Your goal really dictates your entire path. So once you've figured out your why, it's time to explore the what. Let's think of all the different investment types out there as just tools in your financial toolkit. For most beginners, it really boils down to two main choices. On one hand, you can buy individual stocks. That means you're putting your money on a single company to do well. It has high potential reward, for sure, but also much higher risk. Or you could buy something called an ETF or a fund. Now, I want you to think of an ETF as a pre-made basket. Instead of trying to pick one perfect apple, you just buy the whole basket, which might have hundreds of different stocks in it. This gives you instant diversification, and it's generally a safer and much simpler way to get started. All right, we know the why and we know the what. Now we get to the most important part, the how. This is your simple 4-part action plan to get going in 2025. Okay, your path to investing can start with these 4 simple moves. First, just pick a brokerage like a Fidelity or Schwab and open an account. It's super easy. Second, start small. You do not need a fortune. Even 50 or $100 a month can grow into something huge over time. Third, invest that same amount regularly. This is called dollar cost averaging, and it's a brilliant way to build wealth without stressing about the market's daily ups and downs. And finally, diversify. You know the saying, don't put all your eggs in one basket. Together, these 4 steps create a disciplined, low-stress foundation for your whole journey. So what does a diversified portfolio actually look like? Here's a really simple example, just to give you an idea. The core of it, maybe 60%, could be in an S&P 500 ETF. That gives you a piece of the entire US market. Then you could add about 20% in an international fund to get some global exposure. And then you could dedicate smaller slices to trends you really believe in, like maybe an AI fund for growth or a dividend fund for income. Now, of course, this isn't financial advice, but it shows you how easy it is to build a balanced portfolio with just a few key pieces. Getting started is a huge win, it really is. But staying invested for the long haul, that requires the right mindset. So let's talk about how to play the long game, what mistakes to avoid, and what trends you should probably keep on your radar. A lot of investing success is just about what you don't do. So try to avoid these common traps. Don't try to time the market. By guessing the highs and lows, it's pretty much impossible. Never, ever invest money you might need in the short term. Please avoid chasing stocks just because they're trending online, and always be aware of fees because they can seriously eat into your returns over time. So while you're avoiding those mistakes, it's also just smart to be aware of the major forces that are shaping the markets right now. For 2025, things like the ongoing AI boom, the huge global push for clean energy, and amazing innovations in healthcare are massive trends. And of course, big picture economic stuff like interest rates and global events will also play a huge role. Just being aware of these things helps you understand the world you're investing in. And all of this, it brings us to what might be the single most important idea in all of investing. And it's captured perfectly in this quote: "Don't invest to get rich quick. Invest to get rich slowly. Wealth builds over years, not overnight." The real magic isn't some hot stock pick. It's patience and consistency, letting time and compounding do the heavy lifting for you. So here's a thought to leave you with. What's the first small step you're going to take?